evening to all. Myself Vaibhav. In today's session of Market Movers, we will be taking a look on the Nasdaq. Equity markets have been in turmoil starting from the Federal Reserve's monetary policy outlook. In yesterday's session, we saw heavy losses in the US equity indices, but now, as the day is progressing, we are seeing recovery from those levels. Now, the European equity indices are trading higher with gains of more than 1 percentage point. And even if you consider the US equity indices futures for the S&P 500 and the Dow Jones Industrial Average as well, the gains are there in the vicinity of 2%. And you can even say there is a kind of retracement after fall of more than 5 percentage point on all three key equity indices for the US in yesterday's session. So this panic is now kind of subsiding, and at least for the time being we are seeing some stabilization in the equity front, but I'm not really expecting this to last much long, and I think we will see the resumption of downhill journey maybe in next few trading session or after this retracement and due consolidation. Earlier in the day, we got the UK's GDP numbers, and this is actually the data for the month of April. And if we average it out for 3 months, that is, if we count it for 3 months, it is not a perfect quarter. But if we consider the 3 months ended April, then the figure is kind of worrisome, and here the impact of the lockdown is getting factored in as we have 2 months of lockdown almost here including the March and April, and that's why the numbers here is worst. And I think since the this number is even worse than the great financial crisis of 2008 and 9, and here we are talking about the possibility of this number being worse in almost last 6 to 7 decades from World War II scenario. And now we also have got this euro area's industrial production number, and here the industrial production has declined 28% for the month of April in terms of year on year, and if we consider the month on month figure, the decline is of 17%. So either way you look at it, the industrial activity was largely hit in the April area, and this is a month also, the month of April, which was experiencing a large scale lockdown in most of the major economies, and here the impact of that lockdown is now getting visible, and industrial activity is at its lowest levels. Later in the day, we will be getting the University of Michigan's consumer survey data, and here we are getting couple of data points: consumer expectations, consumer sentiments, current conditions, and along with that the inflation expectations as well. And for the month of June, we are expecting little bit of uptick compared to the May's data, so we might see the consumer expectations coming around 70 to 71 compared to the reading of 65.9 in the prior month. And also the consumer sentiment is being expected to improve to almost more than 76 from the prior level of 72, whereas the inflation expectations are expected to come down. Even the Federal Reserve has said in its monetary policy outlook that the inflation is not going to be on its mind, and we can expect even the people's expectation about inflation to cool down, and we are expecting a reading anywhere in the vicinity of 2.5. Now moving on to the data front, the technical front, we will cover the Nasdaq and the dollar index. It has started to rain heavily in my area, the Goa in India. Now let's start with the Nasdaq first. This is the daily time frame chart, and what a rally it has been. And This sharp fall is, I think, it is the largest fall in last 2 to 3 months, almost 2 months since this rally began here, and this fall of more than 5 percentage point, of course, is going to have negative impact on the near-term outlook from the short to medium-term perspective. We will now need to be cautious, as I think this steady upward momentum is now going to take a back seat, and we will see some sort of corrective momentum gaining ground, and we will see consolidation with bearish bias in short to medium term from short to medium term perspective here. We had this new all-time high being made closer to 10,200, and from those levels we almost fell around 6 to 7 percentage point. And as I said, from yesterday's lows we are already up by around 2 percentage point, and for the time being the retracement is happening and the gains are also decent, but I think this is not a resumption of earlier up move. It is kind of you can consider it as a retracement after a sharp fall, and as the price will stabilize again, I think we will need to look for short selling opportunities. Even in today's trading session, I am not really expecting any big moves. Of course, anything can happen, and you can't really rule out anything for 100% certainty, but the probability is quite low, and the probability is quite high for the resumption of downward momentum. So coming to that, we have this first resistance in place around 9,900 zone here. As you can see, we had this break, and then for a day we saw the Nasdaq sustaining itself above this resistance zone, but then in yesterday's session we had this break on the downside, and low was made close to 9,600. And here, though we are off by around 2 percentage points from these lows, we are still pretty much on the downhill journey here, and as you can see, we can expect this regression curve to flatten as the price action is now co- concentrating in the low band of this regression curve. We had this steeply rising regression curve for almost more than 2 months now, and that is likely to change as the gains become incremental and even the sell off sets in. So, from that perspective, I am advising to watch out for this 9,900 zone on the upside, and only a move beyond that can alter the picture significantly. Anything below that, and I would be pretty much in the mood to go for a fresh short selling opportunities. So here, coming to the hourly chart, we have this break below this 200 SMA zone, and also as you can see, we had this prior swing lows being made closer to 9,750 zone. I think as I remember, I had also done a webinar at that point in time last week where we were looking at the possibility of buying the Nasdaq closer to 9,700, and that really went well, and now that is part of the past. Coming to today's session, this is the area to watch out for fresh opportunities here. Unless and until we clearly see a breakout above this immediate resistance zone, as I said, we also have the first resistance of this month's pivot point series, and also here we have this confluence of 50 and 100 SMA area around 9,900. So taken together, we have multiple factors which are likely to act as a strong resistance zone for the Nasdaq's price action, and unless and until we see a clear breakout on the upper side, as I said, the bias, the trajectory is likely to remain on the bearish side. So here, any opportunity to go short in the price band of 9,800 to 9,850 should be a welcome development opportunity to try to exploit, and I think stop loss of 10,000 should be good enough. Of course, we are taking a risk of around 150 to 200 points, but then the times are volatile, and I think even with the risk of around 150 to 200 points, we can target more than 300 points on the lower side. So suppose if we are going for a short sale anywhere close to this price band, then of course naturally our price action target will be lower than the 9500 zone to get us the desired risk reward ratio. And there is a really good possibility of that happening as well. Now let's consider the dollar index. Dollar index has been all downhill for last couple of weeks now, and let's see what's in store for the dollar index. It has shown some rebound closer to this 100% Fibonacci expansion of its prior fall from the levels close to 104 to almost below 99, and then this consolidation and again the resumption of the journey downhill. And here we had this sharp turnaround in yesterday's session, but things are not really that rosy for dollar index just yet. We will need a lot more consolidation on the lower side, and only then we will really be able to say that for the dollar index, the bearish momentum is subsiding. It is too early to say, but there are some crucial price zones which I have marked out, and that can be utilized as our marker whether to go long or whether to go short. So here it is. We have this second support of this month's pivot point series, and then we also had this bottom being made closer to 96. So you can in a way say that dollar index is also finding support closer to 96 level, and from those levels it had rallied almost 1 percentage point. Of course, now as the European session is in progress, it did give up some of those gains, but still, unless and until there is no fresh break on the downside below this second support of this month's pivot point series, I think we can indeed adopt a scalping kind of approach to make range bound trades here, whereas we can utilize this 96 zone as our marker to go long, and unless and until there is a fresh break below these levels, we can continue to watch out for any opportunity to go long here. Of course, we are not looking at significant gains on the upper side from these levels. We are basically concerned with scalping kind of trading opportunities. So from that perspective only, we are looking at these opportunities here. We have this break above 100 SMA, and also these prior swing highs have also been taken out. This is the price zone, the 96.5 area where we had this consolidation going on, and then eventually break, and then after this break on the downside, this 96.5 area also acted as a near-term resistance, a strong resistance for that matter, and then after due consolidation in yesterday's session, it gave way to fresh break for the dollar index price action. And now I feel that we are indeed likely to find some support around 96.5 area for the dollar index, and as I said, the stop loss can come below the second resistance of the monthly pivot point series. So I think the price zone of around 96.20 should be good enough to utilize as a stop loss, and any opportunity after due consolidation here around 96.5 price band can be lapped up for a scalping opportunity, whereas we will be targeting these immediate swing high established around 97 as our target on the upside. So for a risk of around 25 to 30 pips, we will be taking target price of just little over 50 pips on the high side. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while utilizing the information provided. Have an excellent day ahead. See you tomorrow. Goodbye.